Welcome back to Small Caps. My name is Kerry Stevenson. Today, I'm bringing you a roundtable discussion. Now, we did one last year on oil and gas, and this time I'm doing it on lithium, because right now everybody's talking about the electric revolution. We're all talking about going greener and leaner and meaner. And I was chatting to a few people, and they suggested getting some people together to talk about the lithium story and what's going on. And we all know that it all starts with demand, and we all know right now that supply demand, there is a widening gap, prices are going up. Global automakers have latched onto this electrification demand trend, and they're all going great guns to deliver these new model cars. But what effect is that going to have on bringing the supply into the market? Because for those of you that don't know, it's not like increasing the supply of Coca-Cola or Pepsi Max. These things take time, money, and commitment. And so today, what I've brought together three very, very handsome gentlemen to talk with you. The first up, we have Bernard Rowe. He's the Managing Director of Ioneer. The ASX code is INR. Next up is the Chairman of Lake Resources, Stu Crow. The ASX code is LKE. And last, but by no means least, Luke Reinehr is the Chairman and CEO of Kalamazoo Resources. ASX code is KZR. Now, they've all been told that they're not going to be talking too much about their companies. This is a big picture overview of the lithium supply demand, what's really kicking off around here, and how we as investors should be looking at this particular commodity. Is it too fast, too soon? And what can we do about it? And what is the world going to be doing about the electrification model going forward? So first up, Bernard, welcome to Small Caps. Welcome to the round table. Good to see you. Love the background.
Thank you, Kerry. That's the picture from Rhyolite Ridge out at our project in Nevada. And yeah, it's probably got a bit of snow on it right now, not blue sky and sunshine.
And actually, I think it's important, before I ask you for your opinion on the supply response and if it's enough, but it is to let everybody know that Ioneer's project is in the US of A, Lake Resources is in Argentina, and Luke's is here in good old Australia, over in Western Australia. So I've got you from all parts of the world, which is great. So Bernard, let's start with where the supply response is. Is it enough? Or are we going to be seeing a real a critical point in time where this is just going to all fall apart?
I don't think we're going to see it fall apart, but I think it's going to be a tough decade for lithium from a supply perspective. As you pointed out, things don't happen quickly. It takes many years to identify a project, to develop it to the point of financing, final investment decision, and then to build it. So things don't happen quickly, and yet we're having the opposite happen so that's the supply side. We're having the opposite happen on the demand side. Things are happening very quickly now. We had a bit of I guess you might call it a warm-up, or some might even say a false start a few years ago, where we saw actually supply get ahead of demand. But what we're seeing now is a dramatic shift towards adoption of EV penetration, and that has an immediate impact on demand, and the supply cannot respond in the same sort of timeframes. And we're seeing the early stages of what I think is going to play out over the rest of this decade, in that there will, and many people are saying this already, that there's going to be a long ongoing deficit because of the lack of the ability to quickly respond to demand increases. And we're definitely seeing very strong and surprisingly rapid demand increases, because car companies are just switching to EV, and consumers are as well, at a much faster pace than was anticipated.
Yeah, and speaking of anticipation, Stu Crow from Chairman of Lake Resources, you've got a big project in Argentina. Didn't we see this coming? I mean, why is it coming to a crunch now? We're in 2022. Surely there's been talk about, the green economy and the electrification. Why has it got to this point, do you think?
Yeah, it's interesting, Kerry. Look, I think Yeah, you talk about supply and demand. I mean, the underlying problem is demand is exponential and the supply response is linear, and they're never going to catch each other. And you've got this massive growth in demand because these cars are fantastic. You drive one and they're exciting.
Are they?
The consumers are moving there. They want them, and so we saw it coming. The industry saw it coming. The producers or the developers saw it coming, but the OEMs, a lot of the car companies had hoped it all just went away like a bad dream because they were hoping it wouldn't happen, because they weren't prepared for it. And the problem we're seeing now is that they are very late to the party, and this is now globally legislated. So you've got this safety net of adoption of a major disruption. And as you know, all disruptions start off quite slowly and you get into that kick. It was only 3 years ago, there wasn't even 1 million cars made in that year. Last year, 2021, it looks like it's going to come in around 6.2 million electric vehicles made globally. And we're in that kick of the disruption where the adoption of these vehicles and the rollout of new models is accelerating, and there's a real squeeze on supply. It's from a producer or a near-term producer's point of view, it's a pretty exciting time to be in the sector.
And I think that's an interesting point to make, because our audience out there are investors and they're looking at where the opportunities lie. Now, Luke Reinehr from Kalamazoo Resources, 2 years ago, Kalamazoo was very much focused on gold, but you've now done this deal with SQM, is it?
Yeah, SQM, yes.
So the big boys, they're coming in and they're looking for supply. I mean, Luke, are you seeing that now that you're into this lithium space, what's your view on the fact that we're going electric and the supply just isn't there?
Well, I think there's a number of factors about it, Kerry, and that is, it's not just the supply, but at the moment too, we're caught up in COVID with Omicron. We've got supply issues, we've got labour issues. So the next 12 or 18 months are going to be a very interesting time. You look here in Australia, obviously there's a number of projects that are ramping up production, whether it be Pilbara or Wodgina, Greenbushes. But what happens when the borders open in WA on the 5th of February and Omicron comes in and 10% of the labour force is out? I was actually just speaking to a CEO of a major trucking company yesterday in the mining industry. 20% of their drivers are out. He's looking for 200 drivers. So we're going to have this range of issues that just in the next 12 or 18 months in regard to supply. They're going to make things even more difficult. So it's a really interesting time. Lots of things are happening. And I guess, as I think Stu was mentioning as well, typically whether it be a gold mine, nickel mine, copper mine, it's anywhere between 10 to 15 years usually from discovery to production. These things take time. So the world's been caught out, which is probably a good thing for people who are in the lithium game, I'd expect.
Well, that's right. And the three of you have got exposure to lithium. And I guess from an investor point of view, right now the price of lithium is at an all-time high and it seems to be no end in sight. Can that potentially be a threat to the industry if it gets a little bit too high? And I don't mind who answers this one.
Yeah, I'll jump on it, Kerry, because I've never shy of the odd grenade, but why not? It's
I love a couple of grenades, you know me, Stu, and so do our audience. Yeah,
the reality is, yes, of course it can if it goes incredibly high, but people would have said that about coal and probably iron ore when we are trading from $15 and $20 up to $200. It would have seemed incomprehensible that would have been achievable. What you're seeing though at the moment is massive change in battery technology, and even there's a switch.
Whose phone is that? They're gonna be fined. Ladies and gentlemen, if this was a real live conference, I'd be fined.
There's a switch in the battery world. There's a lot more focus coming in on LFP batteries because of the cost of nickel and cobalt and things accelerating faster than even lithium. And that helps because they're cheaper, they're more, they don't require huge battery management systems, so that can help, and they can absorb a slightly higher price. But I still think there's plenty of room to go in the lithium price. And what we're seeing now, I mean, it's continually every week it's going to record levels because there simply isn't any new supply there. There will be some new supply come on, but whether it's enough to match the demand, that's the issue. But I think it will slow things up, and it may constrain the number of cars sold in coming years. But again, it's a strong, it'll keep a very strong price point for all the producers.
Bernard?
Yeah, I think also, there isn't an easy substitute. So, it can go higher because, there's nothing to actually replace it. And the car companies are investing, billions of dollars in battery factories and gigafactories, et cetera, terafactories. So you can't just simply say, well, the price is too high, we're going to go and use something else. There isn't an easy substitute, and investment dollars have already been put to work. And then I think the other thing is that, at the end of the day, the cost of the lithium in a battery is actually not the major cost. It's a cost, and of course when the price of that commodity increases, then the price of the battery increases. But as Stu said, there's technologies that are being developed. LFP's one, solid state's another that just has a much higher energy density. So, through innovation, the quantity of lithium in a single battery or for a unit of power will come down over time, as it already has been. So that'll help. But at the end of the day, it's not the major cost of the battery. And so, I don't think it's at a point where it's getting the prices are becoming prohibitively high, and I think they can go higher. But we're talking spot prices, of course, the $40,000 numbers that we're seeing. That's not long-term contracts, but spot price pulls everything else up, of course, and it's telling you what the demand-supply equation is looking like.
Yeah, I was reading earlier that I think it was Toyota are spending 70 billion. 70 B for billion, ladies and gentlemen, on electrification by the end of this decade. Now, half of that is going to electric vehicle models, and they plan to sell 3.5 million electric vehicles a year. Now, that is double its earlier target. And that's not that far, that's doubled from probably 12 to 24 months ago. So this is moving very, very fast. Luke, are you seeing people coming to you as Kalamazoo? Obviously SQM have come in and said, we'd like to partner with you on your lithium projects, but are others also beating a path to the door and asking to get involved?
Yeah, we're certainly seeing a lot of interest, Kerry. And up in the Pilbara where we are, just to put it in perspective, we're about 50 k's to the east of Pilbara in a pretty good geological setting, and we've got a pretty big landholding there. A lot of people have now moved into there. Just in the last couple of days, a couple of more deals have been announced, a couple of JVs as well. So it's certainly a very interesting area. And I guess the reason being, unlike some of the other projects, this is hard rock or spodumene mining, in the Pilbara, and the focus there and I guess the interest in this part of the world now has become very strong. So yeah, look, we are fielding interest, but SQM was the right partner for us for a whole range of reasons, and we've been particularly impressed by the way that they've dealt with us over the last probably 6 months, and we think it's going to be a terrific relationship going forward. But having said that, there's a lot of Chinese investment as well. Saudis got involved just a couple of days ago in another investment. We're seeing it right across the board. So
yeah, it's really interesting you bring up the Saudis, Luke, because yes, the EV Metals Group are going to be building this big hub in the Kingdom of Saudi Arabia, and they're looking for supply, and they've come out to Australia, specifically to Western Australia, and they're starting to do deals. So they're pivoting from a sort of an oil and gas focus to this sort of EV revolution, and they're understanding that that's where the money, and they've got a lot of money to play. Do you think, with people like Saudi Arabia doing this pivot and throwing money at it, does that allow any projects to come on stream any faster? Like, if you throw more money at it, can we shorten the span it takes to get these projects into production? Any
Well,
one of them can answer
there's
that.
probably a few levels. There's obviously the exploration, but again, that's still a long-term, long-term approach. Production probably more likely the case. We've got to throw some big money at some processing facilities. But I'll just go back to a point you said before, though, Kerry, just in regard to Toyota. That's a really interesting one because they've been the last of the big majors to actually get to the electrification. And so for them to now make a decision to go down this path, I think is very significant to the market. We've seen most of the European manufacturers, and obviously Mercedes has been probably the key driver. But I think seeing Toyota there, that says that this is demand driven now. And probably the other one too, which I think is quite an ironic development, is when you see what Ford are doing in the US with their F-150 Lightning, which is their pickup truck, which is the biggest selling vehicle in the US. So it's the equivalent of our Ford Ranger. Now they've just doubled the sale target for that for the next 12 months. Now that's a big thing. If you can start getting the Midwest driving an electric vehicle, I think, and it's taken up, I think if you get the Americans across into the EVs, that will be a very significant development in this marketplace.
Yeah, I think that's a very good point that Toyota may have come late to the party, but it's a big car maker and they're all moving this way. Bernard, you're over in the US and Luke just mentioned those big cars over there. Are you seeing that there's more of a take-up over there and it's becoming more mainstream?
Yeah, absolutely. So I think we've been working in Nevada on this Reinehr Ridge project for about 6 years. And I would say there's been a paradigm shift in the US in the auto industry, and it's happened all in the last 6 or 12 months. It's quite astounding, really, when you think it's the second biggest car market in the world, and it was definitely very late to the party on adaptation or commitment to adaptation to EV, but it's definitely happening now. And each week there's Ford and General Motors putting out announcements of new targets, and then you've got Toyota there as well, which I think actually this year Toyota was the largest overall car company sales in the United States. It surpassed the others, but Luke's right. The number one vehicle is the Ford F-150, and it seems like the people that I know in Nevada, and it's a pretty good, I guess, barometer because it's the Wild West. And,
the Wild West, yeah.
Most people drive pickups, and there's certainly no hesitation at all about going electric. Whereas I think a lot of people thought that would happen. That would take some time for the Americans to make that paradigm shift, but it seems that it's not taking time, and that there's a very strong willingness to transition. So yeah, absolutely. And I think back to your other point on is it a matter of throwing money at these things to sort of get this all to happen faster? There's no doubt that obviously investment speeds things up, but it's not quite so simple as that either, though, because there's a lot of lithium deposits out there around the world. They're not easy to bring into production. There's permitting issues. There's many of them have variations in chemistry, in geology. You've got brines, geothermals, hard rock, etc. And all of the variations make quite a difference when it comes to processing. So that it doesn't get around the fact that you still need to do a lot of developmental work on flow sheet to understand your chemistry, and at the end of the day, every lithium project that produces the end product, whether it be carbonate or hydroxide, there is a chemical processing plant there. And, that's an integral part of these projects. Now, obviously, in the case of spodumene, there's an intermediary of the spodumene concentrate, the mineral concentrate. But, making the end product is a chemical process, and chemistry matters, and it takes time to develop the right process and flow sheets for that. And, investment helps speed it up a bit, but it doesn't change it dramatically in time. So I think that, there's definitely more funding coming into the sector, than we've seen, going back a couple of years ago when lithium prices are low. We started a process at that time to bring in a strategic partner, and we're talking to all kinds of different groups about funding. Or if you even look further back at what happened when the price of lithium spiked last time, funding projects wasn't easy at all. But it is changing. And, all of a sudden, car companies, cathode companies, battery manufacturers, the Saudis, governments through, loan guarantee schemes like they have in the US, export credit agencies, all of these, and even traditional banks. And that funding wasn't there before, only a couple of years ago. The traditional mainstream banks were not providing project financing for lithium projects, and now they're considering it. So that's definitely going to have an effect, but it's not going to mean that we can really rapidly accelerate everything, in my opinion.
It's interesting, Bernard, you talked about the process of it. And Stu, you at Lake Resources, because I want to go into that sort of ESG is the three-letter word on everybody's lips at the moment, that sort of sustainability and that green and all the rest of it. And Stu, at Lake, you've got a direct extraction. Does that mean that you can shorten the process, I guess, and bring something on stream a little bit more quickly?
Yeah, it does. But, right at the moment, and that's a benefit. We've got we can get to market quite quickly, but it doesn't, once we're in production, we produce it at the same rate as other players as well. But that's not the issue. I mean, we will produce a sustainably, and, an ESG friendly product, but for the next 10 to 15 years, it doesn't matter where the product comes from or what it looks like. The demand is so much greater than the possible supply. If you looked at every possible project that's about to come online over the next 5 to 10 years, we still need more. You've got situations like Tesla where they're cannibalizing their other models just to run out their Model Ys and Model 3s just to build their volumes up. And then case in point, they released their numbers for the year. They did just under 1 million cars. I mean, that consumed something like 20% or 25% of the actual global production of lithium, or LCE, in 2020. And that, that's 1 million cars, and we did 6 last year. So, I mean, that's the issue. There's just simply not enough. And they're talking about doubling their production next year or more. And they've got Cybertruck, semi-trailer, energy storage. We haven't even discussed energy storage. That's bigger than the vehicle market.
Is it really?
You can't deploy that without cells, and you can't deploy cells without the raw materials. And it's not just lithium, but lithium's a major component of all of this. So that's the squeeze point, and that's why it's so exciting right now. And it really
and
is.
I think it's a very good point that you make, Stu, because it isn't just about electric cars. We have an energy crisis as well, and people moving into this electrical energy is becoming a bit of a challenge as well, isn't it? Yep. I'd like to ask each of you as well that what is an investor to do? Now, each of you have got your own companies. I get that, and this is I'll let you do a little thing about your own companies when we get to the end. But there's a lot of companies out there. How do investors navigate their way through all of the different companies and all of the different jurisdictions, and what should they be looking out for and avoiding? That's one for each of you, I guess. Without doing too much on, just buy my shares; it'll all be fine.
Yeah, I'll start. I think the basic rule in investing applies to lithium just like it does to anything else, and that is diversification and doing research and diversifying your investments is important. So I'm not going to give the plug for my company until later.
You can do that at the end. I'll give you 2 minutes at the end. There you go, Bernard.
Yeah, but I think things like jurisdiction matters. Okay, so we all of us are have projects in very I think attractive parts of the world because they're either from a mining friendly perspective, high ranking, low political risk, etc., and proximity to the markets matters as well. But in the case of Australia, obviously we're not that close, but we're well accustomed to supplying materials refined and pre-product around the world. So I think Australia is great position. So jurisdiction matters, and I think, you know, there's nothing at the end of the day for someone who's worked in the resource sector for 30 years. There's nothing like being in the bottom quartile of the cost curve, because then you're insulated from the ups and downs of commodity prices. And whilst all of us, I think, agree that, you know, that the rest of this decade it's pretty hard to see when you've got the deficits that structural deficits that we're talking about, the prices aren't going to stay high for the rest of this decade. But who knows? At the end of the day, it's very difficult to predict these things, as we've seen in the past. And that's where, you know, being low cost and bottom of the cost curve is important, because you survive the ups and downs.
And I'll chuck in, you've got to be well funded, Kerry. That's the other thing that's important in these areas. There's a lot of companies out there and, you know, we've been there. You know, we came through the valley of death. The last couple of years have been pretty tough. 2021 was a good year for the sector because the lithium price moved and a lot of projects got financed and a lot of companies got funded. But prior to that, it was pretty tough. So you've got to make sure that the companies that you're looking at are well funded and can deliver what they're trying to do, be it lithium or copper or gold, anything.
Or stay the course, as you guys did when it was, as you said, you walked through the valley.
I didn't get that. Could you try again?
Oh, hello. So we've got a ghost coming around.
Yeah.
Not sure what's going on there. Luke, do you think Australia is aware of the importance of lithium in this global demand situation, and is the government doing enough to support the industry and move it forward as it should be?
I certainly think in WA that is the case, Kerry. But look, you see what's happening certainly in Australia over the last couple of years. It's all happened very, very quickly. But we're the largest producer of lithium now, certainly hard rock lithium in the world. It's happened very, very quickly. A lot of learning, a lot of experiences that come from it. A lot of mistakes are made as well. But I think certainly we've got the support. I guess, is the Australian investment community waking up to it? I've no doubt over the last couple of months. It's been a very, very hot area, as we all know. But we've got to keep delivering projects. That's the key. And so certainly at our level, unlike Bernard and Stu, we're not obviously anywhere close to development at this point in time. But you got a very important part of this process is to have good exploration projects there that are going to be the next producers down the track, and that's where we have to put our money in the ground. And the best place to do it, as far as we're concerned, is on good ground, and that's what we're always looking for.
Stu, thanks, Luke. And I think that you've got some interesting projects out there. Stu, what have been your frustrations? Because I know you've been looking at this for a number of years. As you said a moment ago, you've been through the valley of death. Did you get frustrated when you could actually see that the demand was going to be there, that there was going to be this supply-demand challenge? Because these things don't happen overnight. What were your frustrations with the industry at that time?
You're suggesting I'm not currently frustrated. We're in the middle of offtake discussions, and there are people out there who still don't get it.
Oh,
they're
really?
running car, like Bernard said. There's probably 600 or 700 billion euros or US dollars invested in this transition to electrification in the EV space. And there are people out there who are in charge of, procurement or building cars and building batteries who simply don't believe that there is a problem in securing supply. And unfortunately, there are going to be some horrendous situations over the next few years where people who have failed to secure supply don't make the cut. It's really pretty simple. When you look at someone like, and I talked about Tesla before, their forward planning in terms of their supply chain and what they've been able to achieve and what they are forecasting to achieve and what they've got locked in is spectacular. But there's plenty of car companies out there, particularly legacy auto, as we like to call them, the guys that are trying to transition from internal combustion into EV. It's more than just ripping the engine out of a car without naming any brands and shoving a battery pack in there. It's just a lot more complicated than that, and they've left it really late. So they're going to have to spend a lot of money very quickly to come up to speed to survive. It's my view. So the frustration's still there because the conversations we have with off-takers is that they expect to have off-take agreements at prices that we saw, in the distant history. I mean, we're on this trajectory now. As Bernie said, the cash and the spot prices is an indication of where we're going. And we saw what happened with iron ore how that transitioned from an annually negotiated price to morphing into a, running off priced on the back of the spot market. And I suspect as the volume grows in the lithium market globally over the next 5 years or so, we will see that exact thing happen, and prices will go higher and stay higher for a lot longer until we get anywhere near equilibrium. Because it just, I can't see it on anywhere in the next 10 or 15 years.
Kerry, if I could jump in there and just, give the listeners a bit of an understanding of, what we're actually talking about in terms of numbers or tonnages when we talk about deficit, because the numbers are actually quite astounding. So, I think most sort of banks and commentators would sort of say that at the moment we're probably the world's producing somewhere around 550,000 tonnes of lithium carbonate equivalent units today, and there's probably about 650, plus or minus. So there's about 100,000 tonne deficit already. Okay, and we're only just getting warmed up. I mean, EV penetration rates are somewhere between 4% for the US and maybe up to 16, 17% in Europe. So, that's the sort of range you're talking about. And we've got a deficit of 100,000 tonnes. Well, most banks and industry analysts think that by the end of this decade, 2030, we're aiming for about 30% EV penetration rate, which would mean we're going to have more than 1 million tonnes of deficit.
Wow.
So we're going to have a million tonnes, twice the world's production today, will be the shortfall by the end of this decade. And the end of this decade, as we all know, is not that far away. We're only talking, 7, 8 years will be there. So the numbers are astounding. And you think, well, how did we, we saw this sort of price, squeeze last, a few years ago when we had a bit of a, as I say, a bit of a warm up for this. And, prices shot up into the 20,000s. Now they're up into the $40,000 per tonne range. But, if you look at the reaction to that, it was actually pretty muted. Well, we did go into oversupply because, the EV industry was still in its infancy, and we didn't have those high penetration rates. Europe has gone from nothing to 17 or 18% penetration rate very quickly. So, it's hard to see with those sort of numbers how prices aren't going to be higher for longer. And I think most people are accepting that, with perhaps the exception of some of the off-takers, and I've had similar experience, Stu. Some of them, are very, I guess, what's the right word? It's taking them some time to absorb what's going on. And, it is different than other commodities because you've got this very small 500,000 tonnes of lithium a year. It's not very much. And yet it's hard to add another 500,000 tonnes. It's hard to double it quickly. It's just very, very difficult thing to do.
Yeah.
And it's not just...
And just to follow that up, Kerry, I think it was the European Commission just came out in the last couple of days, and their advice on the demand was that if we're going to meet 2050 net zero, you're going to have to increase supply by 25 times by 2050. Mm. That's a massive number. Even if they're half right, it's still a pretty big number.
Yeah. And then on top of that, you've also got this overlay of security of supply chain, which we haven't really spoken about today, but that's an important factor that just complicates things even more here. Is that there's going to be a move away from dominance of certain parts of the world, particularly for processing of the materials. So security of supply chain is and local supply chain. The big car markets of the world, Europe, China, and the United States are all going to develop their own, not 100% their own, but a significant component will be local supply chain. And, it doesn't necessarily mean, Europe doesn't have a lot of lithiums. I'm not saying that it has to be from mine to car, but parts of the supply chain will certainly be developed. cathodes, batteries, and where possible raw materials close to the markets.
Yeah, and just on that, Kerry, too, the ESG, which we really haven't touched upon, the community and environmental issues in regard to some of these future developments, it's got to be very significant. It wasn't just in the streets of Melbourne that the Serbs were protesting. At Jidar and Rio's project, they're closing the roads there as well. So it's, there's going to be a lot of issues in a lot of markets that are going to make things very, very difficult in regard to supply going forward.
Mm.
Yeah.
Just expand on that a little bit, though, Luke. Where are these supply bottlenecks going to happen, and why?
Oh, well, we're seeing it in Chile, for example. We've got a new president there, left-wing president, new constitution, and there's a whole range. Obviously, Serbia. There's Jadar Rio's project. There's issues there. Vulcan in Germany, got some issues there in regard to environmental. So, and these type of problems are going to continue to occur, obviously, as ESG becomes a more and more dominant issue. So that's another constraint in regard to supply that's going to make things even more difficult going forward.
Mm.
And even Luke mentioned Chile there. You've got some of the biggest producers in the world down there, and there's environmental concerns and there's community concerns about the treatment of the water table. We see that in Argentina as well. So we're very mindful of that, and that's one of the reasons we chose our technology partner, because of the low water usage that we use to extract the lithium in that process. But both the big operators in Chile are talking about expansion. Well, where there's community unrest and concern, those expansions are going to, even if they're just slowed, that impacts the numbers that Bernie was talking about, where suddenly we need this massive ramp up. And if you can only do half that, it just increases the deficit, which puts further pressure on pricing and the ability of the industry to deliver the growth that's being required. Yep. It's a really fascinating, and it's global. That's the thing. It's not just happening in one little jurisdiction. It's all across the world. And the other thing is, from the pull side of it, the consumer is demanding sustainable and audited supply chains. So the pressure is really on, which makes it even more challenging.
Before I go into your 2-minute little comment about your companies, any last comments from you about the lithium market and what investors should be doing? You said before, Bernard, do your own research. Bit of diversification is important. Interestingly enough, there's a bit of a diversification here today, because I've got I've got South America, I've got America, I've got Australia. Perfect.
Exactly. You've passed the first test, Kerry. I think, to your, one of the comments you started with, Kerry, was, are people too late to the party from an investor point of view? Yep. And I guess our message is from this discussion is that, it's looking very, very positive, this sector, for the rest of this decade. What exactly the prices are going to do, we can't predict. But what we do know is that the governments have mandated, and car companies have committed to very aggressive take-up of EVs, and that's going to require a lot of lithium. So I think that the concept of permanent shortage of supply or deficit of supply is here with us for the rest of this decade, and that's a very positive thing for the lithium sector as emerging producers, as the three of us are on the path to. So. I think that the outlook is really positive. There'll be ups and downs and bumps, but, you can't get away from the fact that there's going to be a significant shortage of supply, secure supply through the rest of this decade, and that's got to keep prices up.
Yep. I think on that, Kerry, what that probably will mean too is that from an investment point of view, you're likely to see some significant M&A activity over the next couple of years, I would expect.
Yeah, if only I had a crystal ball and knew where that was coming from, Luke. Stu, any last comment from you?
Yeah, I think this is the beginning, not the end. We've seen some incredible movement in some of these share prices, but it's when you look at the numbers and when you extrapolate it out, this sector is something like I've never seen in 30 odd years in financial markets. I've never seen demand for copper or demand for gold even double in 5 years or 10 years or 20 years. Whereas now, you're talking massive multiples, like Luke said, 25 times the need for lithium. I mean, it's unprecedented, and it's the beginning. I mean, this transition is just happening, and we're right at that inflection point of the disruption. So I think for the next 10 to 20 years, it's going to be pretty interesting and a good sector to be involved in.
A great sector to be involved in, which is why I wanted to do the Lithium Roundtable. Now, before we finish up, I'm going to give each of you a chance to let our investor audience know who you are, and just a little, a moment where you can say why right now is a good time to get involved. So, Bernard, let's start with you. Ioneer, over there with your Rhyolite Ridge in Nevada. ASX code is INR. Bernard is the managing director. Give us why Ioneer is a great investment at the moment.
Yeah, thank you, Kerry. Happy to do that. And then with that, so Ioneer's Rhyolite Ridge projects, it's the most advanced lithium project in the United States. Bankable feasibility finished more than 18 months ago. We have already offtakes in place for our lithium and our boron, which I'll mention in a minute. The project is the equity component of the project is funded already. About 4 months ago now, we announced a partnership with Sibanye-Stillwater, who are investing just under $500 million into the project. So that's the equity component solved. The only piece that we now need to put in place is the debt funding, which we've also just before Christmas announced that we're in final discussions or detailed due diligence with the US government Department of Energy as one potential candidate for that debt funding, but obviously there are others. So, there's a really, really attractive advanced story in the United States, critical part of this potential supply chain for lithium-ion batteries in the US, supplying to the US car market, the second largest in the world. And finally, I said boron. We haven't been talking about boron on this call, obviously, but Rhyolite Ridge will produce about $100 million a year of boric acid, and it's not a byproduct. It's a co-product, and that $100 million a year plus means that Rhyolite Ridge will be at the very bottom of the cost curve, because about 75% of all our costs are covered by the boric acid production. The 20,000 tonnes of lithium that we will produce, or just over, it only accounts for 25% of our costs. So that's why it's right at the bottom of the cost curve. And finally, it's a large deposit. It sticks out of the ground. It's very expandable. So 20,000 is our starting point, and you'll be hearing more from us in the year ahead about our future expansion plans.
Good to hear. Thanks, Bernard. Luke, over to you. Give us what's Kalamazoo up to in the lithium space, and I'll let you do a little bit on the gold as well.
Oh, thanks, Gary. Yeah, look, Kalamazoo has been a gold company for quite a long time, but we had some gold projects up in the Pilbara, which we've done some significant lithium exploration over the last probably 6 or 12 months. Look, we're a lot earlier stage than both Ionia and also Lake Resources, we're quite a few years behind that because we're an explorer at this point in time. But to an investor, that gives you an opportunity for leverage. Where our market cap's a lot less. So we are new to the lithium exploration space, but we have been exploring in the Pilbara for more than 10 years. And so actually even further back than that, my dad was involved in the Friendly Creek tin mine up in the Pilbara, 40 years ago. So We've been around for a while. But look, we've got highly prospective ground in what they call the Goldilocks zone, about 50 k's from Pilgangoora. It looks like a geological analogue. We've been doing a lot of work there. SQM came and approached us to see if we would do a JV. They've farmed in, or can farm in, up to 70%, sole funding the exploration. But we are the manager and operator. So that's a really interesting development for us. So we think we've got a terrific partner there. They've got obviously very deep experience in obviously exploration, development, processing, funding. So we think they're a great partner. But I guess the interesting aspect of that, though, Kerry, is that we both have a first right in regard to each other's interests. So SQM's looking for a major tier one lithium discovery. And if that's the case and we've got 30% of it, we'll be very happy. If not, it gives us the opportunity maybe to take SQM out and have a tier 2 or tier 3 project. So we think that gives great opportunity and leverage for our shareholders. So, we're very excited to be in the space, and great to hear both Bernard and Stu and see, the pathway, I guess, forward to development.
Yeah, it's been a very interesting chat. And last but not least, Stu Crow, Chairman. Oh, look at that. Straight on to changing his background. Did you get jealous that the boys had their little backgrounds going on?
Exactly, I am. Yeah, well, Lake's an interesting story, Kerry. We're based in Argentina, which South America's predominantly produced a large amount of the global lithium supply to date. And there's a lot of expansion and a lot of activity in South America, and particularly in Argentina at the moment. And we've seen a lot of activity there. Lake is no different. We've got 4 projects down there. Our first project, the Kachi project, we are moving towards completion of our DFS in the middle of this year. Keep your ears open for some news around that. We've done an expansion study to 50,000 tonnes, which is looking pretty promising. So that first project could be doubling in size as the demand and the price of lithium continues to soar. And the technology that we're using allows us to look at that expansion. We've had a lot of success with our financing. We've got expressions of interest from export credit agencies, both in the UK and Canada, to fund up to 70% of our capex for the expanded case. And we've had a massive amount of interest out of the banking syndicates to be a part of that. And that money is blended rate of less than 2% for fixed for 8.5 years post-construction. So it's like money I've never seen in construction of a project, particularly in somewhere like South America. So it's remarkable for us to have that. And obviously the purity of the product that we produce and the margins that we deliver on that high purity product are quite remarkable. So if we can take it to double from our PFS levels up to 50,000 tonnes per annum, it's going to be pretty well received by the market and off-takers. And on top of that, just for put the pressure on the guys and the team on the ground in Argentina, we are aggressively accelerating exploration across 3 other projects this year. So we'll be making more news on that in coming weeks. And we're very excited with an aspirational target to try and deliver in excess of 100,000 tonnes of high purity product by 2030. So in that decade that Bernard's talking about, this massive demand, we hope and think and are confident now that we can accelerate our production profile across a couple of projects with the funding support that we've seen and the way this technology works to be able to deliver a lot more product to market quite quickly.
Thank you, gentlemen. It's been a really interesting, it's opened my eyes to the fact I knew that there was a supply-demand challenge. I didn't realise quite how challenging it was. And it's going to be continuing along for the decade. So for investors out there, you must always do your own research. These are opinions, but must always do your own research. Here at Small Caps, we try and bring you interesting discussions, but also highlight some of the companies out there and what they're doing. We hope you've enjoyed this conversation with us today. Thanks for joining us all on Small Caps. And thank you to Bernard, to Luke, and to Stu for joining me at the Lithium Roundtable.
Terrific.
Thanks so much, Kerry.
Thank you very much,
Kerry. Thanks, Stu and Luke.
Yeah,
Good, thanks.
Thanks, Stu.